I want to talk to you guys today about how to know whether or not your loan is logical. I'm Aaron Leeds with Logical Loan. I use that term in a colloquial sense. But in many cases, there are a lot of nuances and fine details in a home loan that can be missed. And maybe you could look back potentially and say, well, we could have gotten a better deal or could have gone a different direction. So I've written down 10 things that I think are good that can help you to know whether or not your loan is logical. Please make sure to like and subscribe as well. And all of my information is in the description box below. So number one, is the payment a stretch? This may seem like just a no-brainer, but when you're looking at your finances, it can be potentially that the monthly payment, the principal, interest, tax, and insurance is a little bit too much. Maybe you want to lower the buy price of the home, or maybe not. Maybe you want to increase it. But a lot of times, and I think especially this is the case in the past couple of years, folks were kind of experiencing FOMO, right? Oh my gosh, in fear of missing out. I've got to buy a house now. And the next thing you know, they purchase the home and their monthly mortgage payment is pretty high. And they're wishing that maybe they had taken their time, maybe had purchased something a little bit more affordable or in a different area or something. So super important, I think, in my experience in mortgage, to look at your overall finances and what's likely to occur in the future and say, is this payment too high for me or is it comfortable? Super important there, right? To know if your loan is logical. Number two, is the rate the best that's available today? Not all lenders are made equal, as you probably know. And there are many factors that go into your interest rate, whether it's your credit score, your loan to value, just how much you're borrowing against the value of the home, how much you're putting down and so forth, your debt to income ratio, right? These factors can contribute toward your interest rate and the cost of doing the loan. So you want to make sure that the rate that you're getting is the best that's possible in today's market. So it may be a good idea to get multiple different perspectives, get a second opinion, right? From potentially like a bank or then also maybe a good broker that you trust. Super important to know if your loan is logical. Number three that I've written down here is the loan type. What type of loan is it that you're getting? Could it be that maybe there's another loan type that would be better for your current needs, desires, wants, your goals in the long term, and maybe the short term too? There are many different types of loans that have different terms and conditions. And it's good to know those ones so you can sort of look at the menu and say, maybe we should go a different direction. That could be just a regular conventional loan, or it could be an FHA loan, a VA loan, or a USDA loan, or maybe even an investor loan. Sometimes we call a DSCR loan, right? Or a non-qualified mortgage product. There are many different types of loans out there. And even within those subcategories, there's even subcategories below those that have many different rules and guidelines that might work for your situation. So make sure that the type of loan you're getting really, really does match up with your desires, your needs, long-term goals. Number four is check the loan estimate. Definitely, this is a humongous piece. If you want to know if your loan is a good deal, that is going to be found in your loan estimate, because all lenders are required, unless they're non-QM, but all lenders that are going to go through typical underwriting with Fannie Mae, Freddie Mac, and so forth, they have to produce a loan estimate. And that document is standard. It looks exactly the same. You can look this up online, go to the CFPB website and so forth, and see what is in each line item or each box of your loan estimate. It will show you things like the cost of doing the loan, the closing costs, your prepaids, your taxes, your insurance, and so forth. Now, of course, on a loan estimate, this is going to be, estimated numbers, and sometimes it can vary slightly or sometimes in large degree, but it's a good guideline to see what's really happening under the hood of that loan. So always check your loan estimate. If you need help with that, of course, contact me. I'll help you go over every section of the loan estimate. But that's a key factor there to know whether or not your loan is a really good loan. Number 5, does your lender have great reviews? This doesn't pertain necessarily to the loan itself, but you want to know that you're working with somebody you can trust, right? I've worked for quite a few different companies in the mortgage space, and it's striking how many folks don't check reviews. And then they find out that maybe they were overcharged, right? So check Google, check Zillow, check Realtor. Zillow actually has a place where you can check lenders. There's a lender section that you can type in your potential lending company or your lender, your broker, and see what kind of reviews they get. Or you can go to their website. You can check many different places. But I would say it's definitely a very popular and, from my opinion, a very good thing to do to check reviews. Number 6, what are the closing costs? This kind of loops us back into your loan estimate. What is included in the closing costs? And is it possible that some of those are unnecessary fees? Is it possible that you could get a better deal somewhere else? Make sure that you know each piece that's in there in the closing costs when you go over this with your loan officer. Number 7, is there a lender credit option? A lot of folks don't know about lender credits. As a broker, I work with hundreds of different lenders, and there are special deals that many lenders will give at certain times throughout the year. And oftentimes, if you're purchasing a home, they'll actually give you a lender credit, which means that when you come to the closing table, you're able to have less money out of your pocket. Super important there. So if there's a lender credit option, maybe it would be a good idea to take advantage of it. Now, there's many kind of nuances there. There's many moving parts. So you want to talk to somebody you trust about that. Talk to a loan officer you trust. But look into a lender credit option. See if that is an option for your loan. Number 8, should you do a buy down? Now, just for those of you who don't know, a buy down is where you pay potentially a little bit of money or more to get a lower interest rate. Now, there's at least 2 different types of buy downs. One, there's something called a 2-1 or a 3-1 buy down. These are similar. It's essentially a temporary reducing of your interest rate. It might reduce your interest rate by 1 percentage point or more for, let's say, the first 2 or 3 years. And after that time period, then your rate goes back to, let's say, the par rate, for example. That would be a temporary buy down. That might be, in your situation, it might be a good way to go. And in some cases, you can get a seller of a property to pay for that buy down. If you negotiate correctly, let's say with your realtor, you negotiate with the seller to have them pay for the buy down. Another thing is option 2 of these, at least 2 options, is a permanent buy down. So you might pay a specific amount to reduce your interest rate of, let's say hypothetically, the par rate is 6.5, but let's say you pay to lower it to 5.5. Now forever, as long as you have that loan, now your interest rate is 1% lower. So that may be a good way to go too. Make sure to consider a buy down, consider that option to make sure your loan is the best loan for you or a logical loan. Number 9, what is the term of the loan? Sometimes a 30-year loan is not the best loan. As a matter of fact, statistically, most folks who have a 30-year loan don't keep that loan for 30 years. Most people will either sell before that 30 years is up, or they'll refinance before that 30 years is up. So it might be a good idea to consider maybe paying a slightly higher amount per month, like a monthly payment amount, but then in return, what you get is a lower rate, potentially lower down, depending on the loan type. And also you would potentially, pay off that loan faster. So you're paying less interest over time, and you're also getting to see the light at the end of the tunnel, much brighter. For example, let's say a 15-year loan or a 10-year loan, as opposed to a 30-year loan. So definitely consider, is a 30-year loan the best option? One other thing there too is that a 30-year loan is very often the case. That's the most expensive loan. because the bank is holding that for the longest period of time. So most often the case, if you do the mathematics on how much you're going to pay in interest over those 30 years, it's going to be a lot more than if you were to shorten the term. Number 10 is, what is your credit score? Very often the case, almost always the case, unless you're non-QM, but let's say very often the case, your credit score is going to determine the pricing of the loan. In real estate investing and in the mortgage world, we say that risk and reward are always correlated. Well, how this pertains to you as the potential borrower is that the lenders or the investors who are willing to lend you this money to purchase the home, they're looking at the risk. Now, one factor, of course, is the credit score. So if you have a very low credit score, they may still do the loan, but the cost and the rate and the payment and so forth to do that loan could potentially be higher than if your credit score is, say, in the A tier, if it's 740 and above. If you have a credit score that's in the 740 and above and so forth, your pricing on that loan and the cost to the loan is likely going to be a lot better. So it might be, depending on your situation, but it might be better to wait a little bit of time, increase your credit score, and then do the loan. Or it might be good to do the loan now, depending on your situation, and refinance in 6 months to a year when rates might be different. So these are just a few things that are super important to look at to know whether or not your loan is logical. Thanks to you guys for watching. Have a great week and contact me with any questions.